Hi, Silver from Bright Broker, and in today's episode I'm going to look at a case study. So I'm going to give a hypothetical family. So the scenario is a couple, a middle-aged couple. They have one child. They have a $5,000 credit card limit. They don't have any personal loans and they don't have any defaults, judgments or bankruptcies. Now they both earn $70,000 each, just to keep the figures simple. That's their gross annual income, doesn't include super, and they're both working full-time for more than 2 years. So how much can they borrow? From a major bank, they could borrow, just have to look at my notes there, $850,000. And from a second tier lender, I did two second tier lenders just to show you the difference there. One of them, they could borrow $810,000. Now with this same lender, you can extend your loan term to 40 years to increase the amount that you could borrow. So that's another thing that we can look at. But with this same lender, if you had a 20% deposit, you could borrow up to $1 million. So all of a sudden, having a bigger deposit means you can borrow more with some lenders. Now the third lender is a little bit of a stricter one, and usually they do have some of the sharper interest rates. You could only borrow $790,000 from this lender. So just wanted to give you guys a kind of idea of how it can vary lender to lender. Now keep in mind, all of these lenders will have a different amount of deposit required, and they'll all have different products with different features and different fees. So hopefully that's been helpful. So just to give you a kind of role play on, this is something that I do with the majority of clients. The first time that they call me, I'll run through their basic scenario and then I'll advise them how much they can borrow, and then also go on to explain how much deposit they might need to go ahead and purchase. Thanks for your time. $850,000. So if you wanted to purchase for about, God damn.